Well, hello there. This is Praveen again. RRSP or TFSA? A good question. I earlier made a video on RRSP and also a video on TFSA. If you have watched those two videos, it will be much easier for you to understand what we'll be discussing today, because in those two videos I explained these two plans in much detail. Both of these plans are great investment plans and are designed to save taxes. We'll discuss them both and then look at some scenarios. But please remember, everyone's financial goals or plannings are different. The primary purpose for RRSP is to save for retirement. On the other hand, TFSA is typically used to save for other purposes including retirement. Requirements for eligibility. For RRSP, you can start contributing into an RRSP plan after you start earning at any age. There is no minimum age required. For TFSA, you must be at least 18 or must have reached the age of majority in the province you reside in. Contribution limit. For 2019 and 2020, the TFSA contribution limit is $6,000. For RRSP, the contribution room for 2020 would be 18% of your 2019 earned income or $27,230, whichever is less. For both TFSA and RRSP, the unused contribution room can be carried forward indefinitely. Withdrawals. A withdrawal from RRSP is taxable, whereas a withdrawal from TFSA is not taxable. Also remember, any amount that you withdraw from RRSP means you lost that much amount of contribution room forever. On the other hand, for TFSA, the amount of withdrawal that you make would be added back to your contribution room in the following year. You do not lose that permanently. Taxation. Your contribution into your TFSA plan are not tax deductible, whereas contributions into your RRSP are tax deductible. Also, the last year you can contribute into RRSP is the year you turn 71. After that, you cannot contribute anymore into your RRSP. It has to be collapsed. It comes to an end. On the other hand, TFSA has no deadline. There is no age limit. If your annual income is over $50,000, it is generally accepted that you contribute to RRSP first. You get a tax break, and after that, if you still have extra money left, you could put into TFSA. On the other hand, if the income is under $50,000, with the basic tax credits you get anyway, it will make more sense to deposit into TFSA rather than RRSP first. RRSP is with retirement in mind. By contributing to your RRSP plan now, when you might be in high tax bracket, you reduce your taxable income. And when you retire and probably are in lower tax bracket, you pay less tax. Also, with the refund that you might get, you can use that refund to put into TFSA and still get extra tax-free growth. TFSA could be used for short or medium-term goals. You can use your growth in TFSA to cover emergency expenses or to make a major purchase down the road. Also, you can use that extra growth in your TFSA to complement your RRSP for your retirement. If you have group retirement plan at work and your employer is contributing, go for RRSP sure. This is assuming that the investment options are doing good, and most of the time they do good. After all, you're getting free money from your employer, and this will go towards your retirement. If your goal is to buy your first home or you have an education goal in the near future, go for RRSP. This is because of the home buyer's plan and lifelong learning plan. You contribute into RRSP, get tax breaks, withdraw the money when you want for these two plans or one of them, and there is no tax implications. I explained about these two plans in much detail in my previous two videos. Under the home buyer's plan, a first-time home buyer can withdraw up to $35,000 from RRSP towards the purchase of the first home. There is no tax to pay, but please remember this amount of withdrawal must be repaid back into the plan over 15 years. The lifelong learning plan lets you withdraw up to $10,000 per calendar year for a total of $20,000 for financing your education or training for yourself or your common law partner. There is no tax when you withdraw the amount from RRSP for this purpose, but you must repay back into the plan within 10 years. At retirement, you probably would be in a lower tax bracket and paying less tax. You were paying less tax during your working years as well when you were in higher tax bracket by contributing into RRSP. So you get double advantage there. But as I mentioned in my previous video, remember any withdrawal from RRSP impacts your eligibility for OAS, GIS and Canada Child Benefits. On the other hand, withdrawal from TFSA does not have any impact on those benefits. We'll now look at two different scenarios. In both cases, the persons are saving towards retirement, and we'll assume that they max out maximum to the preferred plan first, and any money that's left over could be contributed into the other plan. John's annual income is $70,000 and he plans to stop working at 65. By contributing into RRSP now, when he is in higher tax bracket, he will save on taxes and will be paying less taxes when in retirement. So he is better off contributing into RRSP now. Michael has an annual income of $35,000 and he plans to stop working at 65. Because of his low income, he will not get much tax benefits by depositing money into RRSP. Better option is deposit the money into TFSA. At 65, when he makes a withdrawal from TFSA, it will not have any impact on federal tax credits or benefits he might be entitled to. To summarize, these two plans are not really tax-free, but with careful planning, you could save a lot of taxes in the long run. The important thing is the timing of when you pay the tax. If you think your income will go up in the near future, then it might be advisable to save your contribution room in RRSP for future and instead make a contribution into TFSA. But if you're already in high tax bracket right now, you might as well contribute into RRSP and save on taxes in the present. So thank you for watching this video. If you think this was helpful to you, do not forget to like, comment and subscribe. And watch out for my next videos.